Good morning. Question number 20 to 30, as I was instructing to you, supposed to be the homework questions. Okay, you shall check question by question also. Let us proceed. I have not included the face in recording. One is, of course, this requires only a concentration on the explanation and solution. Facial expression is not required. And number two, you'll have a bigger screen. And number three, the file size will be small. Okay. Chandran and Indran are brothers, co-owners, equal share of the property, 8 identical units constructed during 2000-2001. For our current financial year, each co-owner occupied one self-occupied property, which means out of 8 units, Indran and Chandran occupied one each, means 2 units are self-occupied, remaining 6 units are let out. Remaining 6 units are let out at 12,000 per month per unit, like that it is given. Municipal value of the entire house, that means all the 8 units, 9 lakhs. Municipal tax 20% of the municipal value, the same has been paid. Other expenses are given, repairs, insurance, all those things are given. We had seen deduction under section 24 is exhaustive. We cannot claim repairs or insurance. We cannot claim repairs or insurance. Interest on borrowed capital is 3 lakhs. Okay, one of the let out unit was vacant for 4 months. Compute income from property and share of brothers. Okay, so let us work out for the let out units, then let us come for the self occupied units separately. Let out units first let us do, then let us go for self occupied properties. Hope you tried it and continuing with this. 6 units are let out. If you look at municipal value for 6 units, let us work out proportionately. 9 lakhs if it is for 8 units, what is for 6 units? 9 lakhs divided by 8 will give us municipal value per unit into 6. That is for 6 units let out. Then actual rent should be worked out for entire 12 months. For the 6 units, vacancy allowance should be claimed later. 12,000 into 12 into 6 units house property. We can claim vacancy allowance later. Since standard rent is not given, we can take whichever is higher as expected rental value. Whichever is higher is taken as expected rental value minus vacancy allowance. How many months it is vacant? 2 months, right? 4 months, okay. 12,000 into 4. Vacant for 4 months. 12,000 into 4, 48,000. This will give us gross annual value minus municipal tax for also proportionately to work out. 6,75,000 into 20%. Okay, already municipal value we worked out for 6 units, that into 20%, 1,35,000. Okay, so gross annual value minus municipal tax for this 6 units, 6,75,000 into 20%. This will give us net annual value minus deduction under section 24. Yeah, standard deduction 30% of NAV, 30% of NAV. Interest on borrowed capital for 6 units. Interest on borrowed capital for 6 units. Yes. The total interest is 3 lakhs. Total interest is 3 lakhs. Okay. Out of that, if it is for 8 units, what is for 6 units? 3 lakhs if it is for 8, what is for 6? So deduction is 4,29,300. So this is the let out portion value. This is the let out portion value to be shared by Indran and Chandran. 6 units let out. For that we worked out income from house property. Next let us do, or let us go ahead with computation of income for self occupied property. Indran and Chandran self occupied 1 unit each, So NAV will be 0. NAV will be 0. Interest on borrowed capital can be claimed. Interest on borrowed capital can be claimed. So let us do that. Indran and Chandran, NAV of the self-occupied property is 0. If you look at interest on loan taken for repairs, 3 lakhs by 8, it will come to 37,500. It is taken for repairs. Sorry, I forgot to type this in the problem. Sorry, this is the interest on borrowed capital for repairs. Interest on borrowed capital for repairs. I forgot to type in the problem. Yeah. This comes to 37,500. This comes to 37,500. But we know if the loan is taken for repairs, self-occupied property, we can claim only 30,000. We can claim only 30,000. Okay. So, once again I repeat, NAV of the self-occupied units are 0. Interest on loan taken for repairs. There was a typing error in the problem. Maybe you would have taken 37,500, 37,500 like that. No issues. Okay, I request you to please change it. It is interest on loan taken for repairs. Per unit, 3 lakhs is paid for 8 units. So what is the interest per unit? 37,500. But maximum 30,000 only we can claim. So this becomes like loss on self-occupied portion. Loss on self-occupied portion. Now this 2,51,700 will be shared by Indran and Chandran equally. This income from let out portion is shared by Indran and Chandran equally. Income from let out portion is shared by Indran and Chandran equally. So there is a loss of 30,000. There is a profit of 1,25,850. This can be set off. 95,850. 95,850 is the income from house property for Indran and Chandran. Once again I repeat, this interest on loan, I request you to please make a change. Interest on borrowed capital, here I forgot to type one word, for repairs, on phrase for repairs. So 3 lakhs by 8, this is the actual interest. But maximum we can claim only how much? 30,000. Maximum we can claim 30,000. Since it's self-occupied property, restricted to a maximum of 30,000. You can just say it restricted to 30,000. So this is the loss from self-occupied portion. Let out portion, it is equal share. So 125,850, 125,850. So income from house property is this much for Chandran and Indran. Yeah, Mr. A and B constructed there. Please listen, there is a small change in the problem which I have to tell you. Yeah, please listen to it, then you can correct the solution. Mr. A and B constructed a house in their plot of land in Delhi. Both of them constructed the ground floor and first floor, 1000 square feet measurement. A started construction on 1st April 2019 and completed on 1st April 2021. Okay. B on 1st April 2021 and completed on 30th June 2021. Okay. A occupied the entire house from 1st April 2021. B occupied. Okay. So for A, both the floors are self-occupied. Both the floors are self-occupied. B occupied ground floor for own residence. Okay. Let out the first floor for 15,000 per month. Tenant vacated the property on 31st December. After the tenant has vacated, B occupied the whole property, which means it's like ground floor fully self-occupied. B, ground floor fully self-occupied. Okay, first floor let out for a period, self-occupied for a period. Then we are given parental value for each unit. municipal rent of each unit, which means first floor and second floor separately. Municipal tax for the entire house is given. Municipal tax for the entire house paid by each person is given. A has availed a housing loan of 20 lakhs on 1st April 2019. See, construction started in 2019, so this will be from 2019. B availed a housing loan from 1st July 2019 is given. No repayment was made by either of them is given. Now, what is the pre-construction period? What is the pre-construction period? For A, 1st April 2019 till 31st March prior to the completion of construction. So, 1st April 2019 to 31st March 2021 it will come for A. For B, think what will be the pre-construction period? June 30th the construction is complete, but we can take only up to 31st March 2021. 31st March prior to the completion of construction. So, no pre-construction period for B. No pre-construction period for B. Done. We'll work out. Let us work out. Okay, if you look at the first person has occupied the full unit, self-occupied, right? So, for both the units, NAV will be taken as 0. NAV will be taken as 0, but let us work out interest portion. Let us work out the interest portion. Okay. Interest will be from 1st April 2019 to 31st March 2021, that is pre-construction. Okay. Current year interest, yeah, 2 lakhs into 12%, 2,40,000 can be claimed. No issues in that. Pre-construction period interest. Date of loan is 1/4/2019. Date of completion of construction is 1/4/2021. So, we can take up to 31st March 2021. So, 2 years. 1st April 2019 to 31st March 2021, 2 years. So, pre-construction period interest is, okay, 20 lakhs, 12% for 2 years, 4,80,000. Here it is 2019. I made a mistake in typing again. So, 2019, 4,80,000. So, interest allowed is 2,40,000 plus 1/5 of 4,80,000. This 2,40,000 plus 1/5 of 4,80,000. 2,40,000 plus 1/5 of 4,80,000, you get 3,36,000. We have seen for a self-occupied property, NAV will become 0 and the maximum deduction that can be claimed for interest is 2 lakhs. So, this becomes like a loss from house property for Mr. A. Both the units, ground floor and first floor. Sir, there is a municipal tax information. Please ignore for A because both ground floor and first floor is self-occupied. We know the benefit of 2 self-occupied properties are given for an assessee. Interest cannot be 3,36,000. Maximum 2 lakhs can be claimed. So, loss from house property is 2 lakhs. This is for Mr. A. You shall pass and copy if required. Mr. B, you check the problem. Mr. B, the ground floor is self-occupied. Okay, what about the first floor that was let out? That was let out till 31st December. Till 31st December. So, that means 9 months it is let out. 9 months it is let out. Thereafter 3 months self-occupied. Okay, so for let out portion, if it is let out for a period and self-occupied for a period, what is the provision? Everything will be taken for the whole period. Municipal value 75,000. Okay, fair rental value 1 lakh. We have seen, okay, when a property is let out and self-occupied, it will be taken as if it is let out for the whole period. Each unit, please remember, it is not entire property. Each unit, it is 1 lakh per month. So first floor 1 lakh per month, per annum, okay. Municipal value also 75,000 per annum each floor. Then actual rent alone will be taken for let out period. Actual rent alone will be taken for let out period. Once again, this is for the let out portion, first floor. Municipal rental value, fair rental value will be taken for the whole period. Okay, when the property it is not vacant. After December, it is not vacant. It is also self-occupied. It is also self-occupied. So actual rent for the let out period 9 months, 6 months, okay, sorry, 6 months into 15,000, 90,000, whichever is higher will become gross annual value. This we know, when a property is self-occupied and partly let out, it is deemed to be let out for the whole year. Yeah, MRV, FRV, SR and all, we take it for 1 year. Actual rent alone, we will take it for actual let out period. So whichever is higher will give us gross annual value. And many students went wrong in this. Municipal taxes. Please remember, municipal tax of 8,000 is paid by each person. What is the meaning of this? A is paying 8,000, B is paying 8,000. Is it for each unit? No. A paid totally 8,000, B paid totally 8,000. So which means this 8,000 is for both ground floor and first floor. So for this floor, half, 1,000 square feet each, 1,000 square feet each. So half the municipal taxes can be deducted here. So NAV will become 96,000. It is a let out property. 96,000 is the net annual value. And please remember, already we discussed, there is no pre-construction period. See, 1st April started and 30th June it is completed. If the completion is on 30th June, if the completion is on 30th June, can you take up to 30th June? We have to take only up to 31st March 2021. So no pre-construction period for property B. So less deduction for standard deduction, of course, 30%. Interest on borrowed capital. Interest on borrowed capital. Current year interest. Current year interest only can be claimed because there is no pre-construction period. We can claim only current year interest. 15 lakhs into 10% into 1 by 2. 15 lakhs into 10% into 1 by 2. Why 1 by 2? Because this is for first floor. We are working for first floor. So if you do this, you will get loss from house property. Of course, ground floor is self-occupied. NAV is equal to 0. The deduction will be given for interest. Deduction will be given for interest. Okay. How 75,000? Simple. 15 lakhs into 10% into 1 by 2. 75,000. Once again, repeat. Yeah, total losses. Total losses are much? 82,800. Yeah, I'll explain once again. For B, the let out unit, that is the first floor, FRV, MRV taken for whole year, actual rent for the actual let out period. Why are we doing this? We have learned this already. The property is let out and self-occupied for a period. Everything will be taken for the whole year except the actual rent which is taken for actual let out period. Whichever is higher is GAV because there is no standard rent given. Whichever is higher becomes GAV. Okay, municipal taxes paid for this let out unit. Municipal tax paid for this let out unit, 8,000 by 2, 4,000. Net annual value becomes 96,000. Standard deduction 30% of NAV. Interest on borrowed capital, 15 lakhs into 10% for the current year into 1 by 2. This is for this let out portion. So loss from house property it comes. Then for the self-occupied portion, NAV is 0. Deduction for interest is allowed up to a maximum of 2 lakhs for self-occupied property. So loss from house property is 82,800. And please remember, for B, there is no pre-construction period. For B, there is no pre-construction period. There is no pre-construction period. Okay. 1st April 2021 till what? 31st March 2022. We cannot take that. 1st April 2021 to 31st March 2021. So it will be like literally zero. There is no pre-construction period. But current year interest can be claimed. Current year interest can be claimed. Yes. This is a current year interest. $75,000. So total loss is 82,800. Next, question number 22. Okay, for US, the gross annual value is given to us. She purchased a self-occupied house on 1st July 2021. Municipal value of the house is 35,000 per month. Okay, as this is given. She has taken a loan from Standard Chartered Bank for this property. Interest details are given to you. You shall read the problem full, then we will solve. He is a resident and ordinary resident. So all incomes, global income is taxable. Okay, in Los Angeles, okay, she is holding a property, but of course, she is using for own residence. Loan from Standard Chartered Bank is given to us. Prior to April 2001, 1st April 2020 to 31st June 2021, 1st July 2021 to 31st March 2021, like that it is given to us. So we are given interest for different periods. Okay, she had a house property which was sold in 2019. During the current year, she recovered what? Arrears of rent. So for arrears of rent, 70,000 minus 30%, that is taxable. It's a simple problem. Don't think too much. It's a very, very simple problem. Let us try to work out. Please remember, both of them are self-occupied properties. Both of them are self-occupied property. Now, look at the wordings used. Here, many students go wrong by taking some pre-construction period and all. Okay. She purchased a self-occupied property in Chennai from 1st July 2021. She purchased and self-occupied. So there is no construction involved. There is no construction involved. So there is no pre-construction period. There is no pre-construction period. So all these things are given to you just to confuse. All these things are given to you just to confuse. Okay. She purchased and self-occupied a house in Chennai from 1st July 2021 as given. Okay. She has taken a loan from Standard Chartered Bank for this property. Interest details are given to us. So doesn't matter. All these things doesn't matter for us. Okay, whatever is paid after the purchase of the property, that only can be claimed as a deduction. That only can be claimed as a deduction. So NAV of SOP, let it be in India or outside India, nil. Deduction for interest under section 24, only current year interest. That is what is paid for the purchase of property, 131,300. That's actually 2021. Okay, 131,300. Only that can be claimed. 131,300. Okay. So loss from self-occupied property then arrears of rent into 70% is taxable. Why? Because 30% standard deduction is given. 70,000 into 70%. So this will become a loss from house property. Please understand, it is a purchased property. Chennai property is not a constructed property, it is a purchased property. So only current year interest after the purchase can be claimed. 131,300 only can be claimed. Maximum deduction is of course 2 lakhs. For self-occupied property, maximum deduction is 2 lakhs, but actual interest is only 131,300. So that becomes like a loss from self-occupied portion. Arrears of rent are unrealized and recovered into 70% taxable because 30% standard deduction. So loss from house property is 82,300. Only when there is a construction, then there is a pre-construction period, there is a pre-construction period interest. Sir, it is okay. There may be a doubt in this area. Okay, sir, there is a gross annual value given, like $1 is equal to 65. What to do? See, that is also a self-occupied property. NAV is 0. Chennai property also NAV is equal to 0. All these values irrelevant. All these values irrelevant because NAV is directly 0. Then interest on loan 1,31,300. Loss from self-occupied portion. Arrears of rent into 75% taxable. Loss from HP is 82,300. Simple. Look at question number 23. This is similar to we have discussed already, all of them are self-occupied. All of them are self-occupied. The particulars for the previous year is given to us. Municipal value, fair rental value, standard rent is given. A date of completion or purchase. Okay, this is before 1,499. All these things are after 1,499. Before 1,499, if it is a self-occupied property, maximum 30,000 deduction can be given. Here interest on money borrowed for repairs is given. Interest on money borrowed during the thing is given to us. So we will suggest based on the taxable value. We will suggest based on what? Taxable value. As of now, let us assume all the houses are deemed to be let out. As of now, let us assume that all the houses are deemed to be let out and work out. First, let us apply the steps. And work out. Municipal rental value or fair rental value, whichever is higher. Compare that with standard rent, whichever is lower. So this one, 3 lakh or 3,75,000, whichever is higher, 3,75,000. That with 3,50,000, whichever is lower, will be 3,50,000. So GAV for house 1 will be 3,50,000. Then 365 or 275, whichever is higher, 360 or 275, whichever is higher, 360. That amount or 3,70,000, whichever is higher, 3 lakh, whichever is lower, okay, whichever is lower. Whichever is lower will be 3,60,000. Then next house, 330 or 380, whichever is higher, 380. 380 or 375, whichever is lower will be 375. Once again, 3 or 375, whichever is higher, then that amount with 350, whichever is lower. Next, 360 or 275, whichever is higher, that with 370, whichever is lower. House 3, 330 or 380, whichever is higher, then that with 375, whichever is lower. That will give us gross annual value. Municipal tax is 12% of municipal valuation. Municipal tax is 12% of municipal valuation. So 3,50,000, 3,60,000 and 3,75,000 is the gross annual value. Municipal taxes paid 12% of municipal value. 3 lakhs into 12%. 3,60,000 into 8%. this one 3,30,000 into 6%. Municipal tax paid will give us net annual value. Let us not decide based on this, because there is a deduction for interest is also given to us. Okay. Okay, we have to work out with options. We have to work out with options. Option 1, let us take house 1 as house 1 and house 2 as self-occupied property and house 3 as deemed let out property. So what will be the NAV for house 1 and house 2? Self-occupied property, NAV will become 0. Okay, then what is the NAV of house property number 3? 3,55,200 less standard deduction. This into 30%. We have to work out with options, there is no other go. Less interest. House 2, look at house 1, there is no interest. House 1, there is no interest. House 2, taken for repairs, actual is how much? 55,000. If interest is if the loan is borrowed for repairs, it is restricted to a maximum of 30,000. Self-occupied portion maximum 30,000. House 3, no problem. House 3, deemed let out property, like that we take it. So no limit for interest. Actual interest can be claimed. So if you look at this plus, sorry, so this will be the income. If house 1 and house 2 is taken as self-occupied and house 3 as let out. Once again I repeat, option 1, house 1 and house 2 taken as self-occupied, house 3 as let out property. NAV for the self-occupied property will be 0. NAV for deemed let out property will be 355,200. Standard deduction is 106560. Interest for house 2, it is a self-occupied property. Okay, self-occupied property, maximum we can claim only what? 30,000. Deemed let out property, there is no limit. So if this option is chosen, taxable income will become 43,640. Let us work out with other options. Option 2, house 1 and house 3 we take it as self-occupied, house 2 as deemed to let out. NAV of house 1 and house 3 will become 0 because it is self-occupied. NAV of house 2, because we take it as deemed let out property, what is NAV? 331,200. Less standard deduction. This into 30%. Less interest on loan. House 2, it is taken for repairs. Please remember, it is a deemed let out property, no limit. Okay, 55,000 we can claim. House 3, self-occupied property, maximum we can claim only 2 lakhs, but actual is only how much? 1,75,000. So we can claim the actual. Please remember that restrictions are applicable only for self-occupied property. Interest on loan taken for repairs, For a let out property or deemed let out property, there is no limit. Okay, house 3, self occupied property, we can claim up to 2 lakhs, but actually is only 1,75,000. So if you look at this income from house properties, this minus this, we have to work out with options, there is no other go. 1,75,000, right? Yes. So if you go for this option, 1,840. So don't decide just based on NAV. If the interest is given, work out completely. This is option 2. So option 1, we have taken house 1 and house 2 as self occupied. House 3 as what? Deemed let out. Okay. House 1 and house 3 self occupied. House 2 is taken as deemed to be let out. Next option, house 1 is deemed to be let out. House 2 and house 3 we are taking it as self occupied. NAV of house 1, that is a deemed let out property. NAV of house 1 deemed let out property, how much we worked out? 3,14,000. NAV of house 2 and house 3, which is a self occupied property, it will become 0. So less standard deduction. This into 30%. Less interest on capital. House 2, self occupied property, interest on loan for repairs. We have paid 55,000, but maximum we can claim self occupied portion, maximum we can claim 30,000 only. House 3, let out portion, sorry, self occupied portion. In this case, we take it as self occupied portion. Okay, maximum we can claim 2 lakhs, but actual is only 1,75,000. If you work out this option, this is our income from house property. So which option is better? You want to pay more tax or less tax? We want to pay less tax. Which option will be chosen? Option 2 should be chosen, because this is having lesser income from house property. If you opt for first option, house 1 on house 2 self occupied, house 3 as deemed let out, our income is more. Whereas house 2 taken as deemed to be let out, house 1 and house 3 self occupied, our income is only 1,840. Option 3, if you go also, yes, our income is more, taxable income is more. We want to save the tax. When income tax allows you to choose, better to choose this option. Option 2 will be chosen, that is house 1 and house 3 are self occupied, house 2 is taken as deemed to be let out, like that. This is the answer for third option that we have taken, but the examination, this is the option that you should recommend. You shall pause and copy this. Yeah, if you have not taken up this part, yes, pause and copy this part. Next, this part. Next, this part. We will go to the next question. Question number 24. Prem owns house in Madras. During the previous year, 2/3 of the house is self-occupied, 1/3 is let out. Okay. Rent is 8,000 per month. Municipal value is given for the whole house. Fair rent is given 2,70,000. Standard rent is given. Municipal tax is given. It's a simple problem, 2,50,000 was taken. 25 lakhs was taken. For the current year, they have given the interest. Very, very simple and straightforward problem to work out. 2/3 self-occupied, 1/3 let out. So self-occupied portion, NAV 0, interest alone can be claimed as a deduction. Let out portion, let us work out. Yes, for self-occupied property, NAV will become what? 0. For self-occupied property, NAV is equal to 0. Deduction, interest on loan. Total interest paid is how much? 1,20,000. This is for the whole house. So 2/3 is self-occupied. 1,20,000 into 2 by 3, 80,000 can be claimed. 1,20,000 into 2 by 3, 80,000 can be claimed. Yeah, we can claim up to 2 lakhs, but actual interest is only 1,80,000. You get loss from self-occupied portion. NAV 0, let out self-occupied property 2/3, so 80,000 can be claimed. Then let us come for let out portion. 1/3 is let out. So all the value should be taken 1/3. Municipal value, parental value, standard rent, everything you should take 1/3. Everything 1/3. Actual rent don't take 1/3. That is already given for the let out portion only. Actual rent is already given for the let out portion. Apply the step. 1 lakh or 90,000, whichever is higher, 1 lakh. That 1 lakh or 1,10,000, whichever is lower, 1 lakh. That with the 96,000, whichever is higher, will be 1 lakh. Apply the steps, you get gross annual value. Please remember, municipal value, parental value, standard rent, 1/3. Actual rent already given for this 1/3 only. So apply the step, you get gross annual value less municipal taxes paid, 1/3. Otherwise, directly you can take this value into 10%. This 1 lakh into 10%, 10,000. We get net annual value less standard deduction and interest on loan 1/3. Standard deduction is 30% of 90,000. Interest on loan 1,20,000 into 1 by 3. So from 90,000 deduct these two, you get 23,000 income from let out portion. See, there is a loss from self-occupied portion. This can be adjusted against what? Income from let out portion. If you adjust it, you will get taxable income from property. Taxable income from property is 57,000. 80,000 loss, 23,000 profit. So net loss, actually this is a net loss. Yeah, this can be set off against other heads of income, which we will see. What is the order of set off, how to set off, how many years carry forward, we will see in a separate chapter. Clear? Let out portion 80,000 deduction for interest on capital. Okay, self-occupied portion, proportionately you take municipal value, parental value, standard rent. Actual rent is already given for the let out portion. GAV you get minus municipal taxes paid, you get which one? NAV. On that standard deduction and what? Interest on capital. Okay, you get income from house property. The interest on capital 1/3, everything that is 1/3. Net loss from house properties 80 minus, that is 80 loss, 23,000 profit, 57,000 is the net loss from house property. Done. We shall proceed to the next one. Anand sold his residential property in March 2020. In June 2021, he recovered a rent of 10,000 from Gaurav, from whom he had let out this house for 2 years from April 2015 to 2017. He could not realize a monthly rent of 20,000 from the tenant. Okay, further, Mr. Satish, in April 20,000, he has increased rent from 12,000 to 15,000. The same was subject to matter of dispute. Finally settled and recovered 69,000 as arrears of rent. Okay. So first to find out, okay, how this particular thing is going to be adjusted. See, let it be unrealized rent or arrears of rent. It's the whole problem is the full story. If you look at it, it can be solved in 1 minute of time. What is the unrealized rent recovered? What is the arrears of rent recovered? That is with retrospective effect. Whatever may be, this 10,000 and 69,000 is taxable. 10,000 and 69,000 is taxable after adjusting 30%. That's all. Total you collected 79,000, 30% standard deduction. This is for taxable for 21-22. Arrears of rent or unrealized rent, whatever it is, recovered minus 30%, taxable 55,300. That's all over. We are not bothered how much was due, how much was adjusted, in which year it was adjusted and all. If you recover it, it becomes taxable. Good. Yeah. Copy this. Unrealized rent or arrears of rent recovered is fully taxable after adjusting 30% standard deduction. Done. Next. Aparna co-owns a residential property, Kolkata, along with her sister Dimple. Okay, where her family resides. Okay, both of them have equal share in the property. Same is used for self-occupation. Okay, interest payable is 50 lakhs into 10%. Loan was taken for acquisition of the property. An Aparna Miss owns a flat where parents reside. She has taken a loan of 30 lakhs at 12% on 1/10/2020 for repairs. Compute deduction that will be available for Aparna and Dimple. See, 50 lakhs into 10%, it will come to 5 lakhs. 50 lakhs into 10%, 5 lakhs. Each co-owner can enjoy the benefit of deduction to the extent of 2 lakhs, maximum 2 lakhs. Okay, interest on loan taken for repairs, yes, maximum 30,000. It's a simple question. Read the question once again, then we will solve it. Understand the question, then let us work out. 50 lakhs, 10%. 5 lakhs is the total interest for the property in Kolkata. So that benefit of self-occupied property is given for both. 2 lakh 50, 2 lakh 50, like that you can split between co-owners. Then interest on loan taken for repairs, yeah, you can take it separate. Then you can claim the total interest. Kolkata property. that is 5 lakhs. Each owner is given a benefit 2,50,000 for Aparna and 2,50,000 for Dimple, but the maximum deduction then which one? Aparna owns a property in Pune. Interest, if you look at 3 lakhs into 12%. Okay, this is owned by Aparna separately. Okay, this is taken for repairs. So this is the property for construction or purchase, interest 30,000. So total interest. That's not the answer, wait. 2,30,000, this is 2 lakhs. However, interest cannot exceed 2 lakhs. Simple, you can just put 2 lakhs, 2 lakhs. Why need to work out this much? Roughly you think and work out, okay? Then give it. Already this 2 lakhs limit exceeded. So anyhow, interest for loan for purchase or construction 2 lakhs, repairs 30,000. Eligible interest is to like 2,30,000, but the maximum deduction for interest cannot exceed 2 lakhs. Otherwise, this is the allowable deduction. 2 lakhs and 2 lakhs are the allowable deduction. You can expect this question for about 2-3 marks, 2 marks maximum. It should be MCQ, but maximum 2 marks they can ask that. Question number 26 over. Yeah, let us move on to question number 27. Raman is a co-owner of the property along with his brother holding equal share. Okay, municipal value is given, fair rental value is given, standard rent is given, rent received is given. Okay. The loan for construction was jointly taken. Interest charged by the bank is 25,000. 21,000 has been paid. Okay. Interest on unpaid interest is given. They have taken loan, fresh loan. They charged 5,000. Okay. Municipal tax paid by the tenant cannot be claimed. Paid by the tenant cannot be claimed. Compute the income chargeable to tax. Read the problem full. Try to work out. Then let us give the solution. So it's a let out property. You can work out the house property income, then allow the deduction. That is, work out the income, then share it amongst what? Raman and his brother. This is also a joint property. Okay. Yeah, let us work out. The municipal taxes are paid by tenant, so you cannot claim the deduction. First, let us apply the steps. 1,60,000 or 1,50,000, whichever is higher, 1,60,000. That with 1,70,000, whichever is lower, 1,60,000. That with actual rent, whichever is higher. I hope actual rent amount would be higher. 15,000 into 12, 1,80,000. So gross annual value will be 1,80,000. Less municipal tax paid by the tenant. So can you claim deduction? We cannot claim deduction. So deduction under section 24, interest, that is, sorry, standard deduction is 30%. Okay. Interest on borrowed capital. Interest on borrowed capital can be claimed as a deduction, 25,000. Please remember, I've informed you already, this can be claimed on accrual basis. Only municipal tax paid can be deducted, but interest on loan on accrual basis you can deduct it. Then interest on unpaid interest cannot be claimed. Interest on unpaid interest cannot be claimed. It's like a penalty, it cannot be claimed. To repay the loan, you have taken a fresh loan, for that interest is charged. Yes, that can be claimed. Interest on unpaid interest cannot be claimed. Interest on a fresh loan taken for repayment of old loan can be claimed. So from 1,80,000 minus 80,000 interest and standard deduction 84,000, you will get income from house property. In this, Raman will share 50% and his brother will share 50%. Gross annual value 1,80,000 by applying steps. Municipal tax cannot be claimed as a deduction. Then NAV is 1,80,000. Standard deduction 30%. Interest on capital 25,000. Interest on loan taken for repayment of another loan, yeah, it can be claimed. Interest on unpaid interest cannot be claimed as a deduction because it's like a penalty paid by you. 96,000, equal share 48,000, 48,000. Municipal tax allowed as a deduction only on payment basis, but this one, interest on loan, can be deducted on accrual basis. Yeah, you shall pause and copy this if required. We will move on to the next question. Okay, one residential house in Mumbai. The house two has identical units. One unit is self-occupied, another is rented for 8,000 per month. The rent house was vacant for 2 months. Okay, all these models we have worked out already. Particulars of the house is given: 1,62,000, 1,90,000. Fair rent is given. Municipal tax, lift and water charges are given. Okay. Interest on capital borrowed, lease money is given. Insurance charges are given. Repairs are given. Compute his income from house property. Okay, look at interest on borrowed capital. See, the lease money, insurance charges, repairs. Can it be claimed as a deduction? No. Deduction under section 24, only two deductions: interest on borrowed capital and standard deduction. Even this light and water charges cannot be claimed as a deduction. Cannot be claimed as a deduction. Interest on borrowed capital, yes. 15,500 per month means 18,000. 18,000, it comes to 18,000, right? So in this let out portion, half of the thing is for let out portion. One unit is self-occupied, the other unit is rented. A vacancy allowance you have to claim. This is given for the whole house, so you have to take for the self-occupied and let out portion separately. So self-occupied portion NAV is equal to 0. Interest on loan 1,500 into 12 will give us 18,000. Half self-occupied. So balance will give us, of course, loss on self-occupied portion or property. Let out portion, everything half the amount. 162 into 1 by 2, 190 into 1 by 2, 185 into 1 by 2, everything 1 by 2. Municipal value half the amount, fair rental value half the amount, standard rent half the amount. Actual rent alone, take the actual value. For 12 months, vacancy allowance will be claimed separately. So municipal value, fair rental value, standard rent, actual rent, all these things half the amount. Actual rent alone for the actual rent collected. Apply the steps. Whichever is higher, 95,000. Whichever is lower, 81,000. Then whichever is higher, 96,000. That will give us expected rental value. Less vacancy allowance for 2 months. 2 months. 2 into 8,000, 16,000. Gross annual value you get. Less municipal taxes paid for this portion. Municipal taxes 15% of municipal value. 95,000 into 15%. Net annual value. From this, two deductions are allowed. standard deduction, then interest for this portion. Already for the self-occupied portion we claimed 9,000, balance for the let out portion 9,000, income from house property, let out portion. This can be set off with this 9,000. Okay, minus 9,000 loss from self-occupied portion can be adjusted with income from let out portion. Balance is taxable. What is taxable? 28,025 is taxable. This is nothing but after adjusting loss from self-occupied property. You get net income from house property 28,025. It's a very good problem. This is not a new one for us. Please remember, in case of vacancy, what you have to do? You have to first work out every value, all these values for the whole year, then claim the deduction for vacancy. Done? Good. If required, you shall pause and correct or copy your answer. We will proceed. Okay. 1/3 is let out at a monthly rent of 5,000, 2/3 is self-occupied, blah blah. Same kind of a question. Construction was began on 1/2014, completed on 31st May 2017. On 1/7/2014, loan taken for construction. Okay, interest on loan taken is given. Okay. So 1/3 is let out, another portion is self-occupied, 2/3 is self-occupied. Read this question. Please pause and try to work out, then of course you can proceed with the solution next. First let us work out the interest. Yeah, current year interest, what is the loan? 1 lakh into 12%. Current year interest 1 lakh into 12%, 12,000 can be claimed fully. Pre-construction period, what is the pre-construction period? What is the actual pre-construction period? 1/7/2014 to 31/5/2017, but we cannot take up to this 31/5/2017. We can take only up to 31st March 2017. 1/7/2014 to 31st March 2017. It will come to 33 months. 1/7/2014, okay, 9 months, then plus 12 plus 12. It comes to 33 months. So how to calculate interest for this period? 1 lakh into 12% into 33 by 12. 1 lakh into 12% into 33 by 12. Why? Because 33 months. So divided by 12 will give us annual. So allowable interest will be 18,600. That is 12,000 plus 1/5 of 33,000. 12,000 plus 1/5 of 33,000. So this is the total interest allowable. Yes. Current year interest plus pre-construction period interest into 1/5. It gives us 18,600. We have done many problems based on this. You should not make any mistake now, because these are all basic calculations. We will proceed to the computation of income next. Okay. All the values for the let out portion. 1/3 is let out. Municipal value, fair rental value, standard rent, everything you should take it 1/3. 1/3 is let out. 32,000, 42,000, 36,000 and all is nothing but the values like FRV, MRV, standard rent, all those things into 1/3. Actual rent will be taken based on actual amount. Yeah, 5,000 into 12, 60,000. Apply the steps. 32 or 42, whichever is higher, that 42 or 36, whichever is lower, then 36 or 60, whichever is higher. 60,000 becomes gross annual value less municipal taxes paid. Municipal taxes paid 11% of the municipal value. No vacancy, no unrealized rent, nothing. So municipal taxes 11% of municipal value. Yeah, deduction under section 24, standard deduction. Then on this interest portion, for the let out portion, 1/3 can be claimed. Total interest is 18,600, that is allowable. On that, 1/3 is allowed for let out portion. Self-occupied portion, NAV is 0. Okay, of course, this is income from let out portion. Self-occupied portion, NAV is equal to 0. Interest will be 2/3. Interest will be 2/3. 2/3 is self-occupied. So 2/3 of interest can be claimed here. Yeah, whatever is interest we claim, that is the loss from self-occupied portion. So net income is 20,936. Let out portion 33,336 minus loss from self-occupied portion 12,400. You get net income from house property. It's a simple problem. It's only like a practice question. We have done more than sufficient problems. Yeah, if required, you shall pause and copy this. Yeah, the 30th question is like a repetition of whatever we have done in the regular others already. So please ignore that. So with this, house property chapter is over. House property chapter is over. I request you to try multiple choice questions because they are given with answers. I request you to try them. Yes, after completing this, yeah, there will be a test that you have to take up. Test questions are added in the drive, are going to be added in the drive. Of course, those who opted for pen drive lectures after the completion, okay, it will be there. Okay, so I request you to take up the test. After practicing this and after practicing multiple choice questions, take up the test on house property. So next we begin with the most important chapters at intermediate level, that is important for about 20 marks. Intermediate level, minimum 20 marks, you will get questions from that, MCQ, all those things. At final level, this is important for about 30 to 35 marks. 30 to 35 marks, it is important at the final level. So this is not over. This PGBB is not getting over at inter itself. The knowledge that you learn here will be continued at your final level also. So meet you in the next session. Have a great day.